Okay, welcome to FCL Accountants Tuition Center YouTube channel. Luando Franklin is my name. I'm the lead tutor and also the Chief Executive Officer at FCL Accountants Tuition Center, also the pioneer of FCL Accountants Tuition Center, the tutor with vast experience in lecturing and training accountants. In today's video, we are going to look at control accounts, and we shall look at the definition of control account, types of control accounts, and then we shall look at the preparation of the control accounts. This video is for students who are doing the knowledge level of accountants, ACCA knowledge level, CIMA foundation level, and ZICA knowledge level. We have the definition of control account. So control account, a control account is an account consisting of transactions of similar items. Transactions of similar items. Is that okay? So a control account is an account consisting of transactions of similar items. Is that okay now? So there are two types of control account. We have one, the sales ledger control account. Sales ledger control account. The sales ledger control account is also known as the receivables ledger control account. Then we have the purchases ledger control account. So those are the two typical control accounts that we are going to look at. Now, I want you to understand what are the benefits of control accounts. Why should you prepare control accounts? I want to give you an insight information. For example, the sales ledger control account is the total account for all the credit customers account. The purchases ledger control account is a total account for all the credit suppliers. So basically there are two people. There is one person doing the individual accounts. And another person doing the control accounts. So there are two individuals there. Because there are two individuals, they act as a check on each other. Now the benefits. The benefits are one, control accounts help to prevent frauds. Because there are two people doing different sets of accounts, they'll be checking on each other. Number two, they help to locate errors because these two separate accounts, they must have the same balance. So if they are not balancing, then you have to check for the errors. Help locate errors. Number three, control accounts provide instant figures for inclusion in the financial statement. For example, if you are looking for the total receivable figure, It will be found in the receivables control account for inclusion in the final account. In the same way, if you are looking for the total payables figure, it will be found in the payables ledger control account. So provide instant figures. Provide instant figures. Provide instant figures for inclusion. For inclusion in the final accounts. Number 4, control accounts are self-balancing. Control accounts are self-balancing. So those basically are the major advantages of control accounts. There are also disadvantages. The disadvantages which we have the major one is there is duplication of work. Duplication of work. Instead of one person doing the job, there are two. That's duplication of work. Number 2, the process is expensive for small businesses. Expensive for small businesses. Number 3, time consuming. So basically those are the disadvantages. Now I want to show you the format. The format for the sales ledger control account, abbreviation, sales ledger control account. That's abbreviation. The sales ledger control account, this is the debit, credit. The opening balance is always the debit balance brought forward. Sometimes, not in all cases, we have a small balance on the credit side where the same receivables are also suppliers, so we are owing a small. The balance brought forward. The total credit sales, they are found in the sales journal. So like we said, the sales ledger control account is for credit customers. That is for credit sales. So the total credit sales are found in the sales journal. That's where you get it. Then we go to the sales returns. Sales returns are found in the sales returns journal. Then we have discount allowed. Then we have bad debts written off. Abbreviation for written off. Then we have contra. Contra is set off, where we have some receivables are owing us. We are also owing them. We can set off. Contra here is set off. Then we also have the dishonored checks. Customers paid us by check, and these checks are not honored. We have to reverse. We also have cash and bank received from credit customers. So the format, you must understand them. So of course, this side will be bigger. You start with this one. Then there we have the balance. Which will bring on that side. So basically, this is the format for the sales ledger control account. I'll also give you the format for payables or purchases control account. Purchases ledger control account. Since we are owing, the opening balance is credit. The bigger balance will be on the credit side. Can also have some who are owing us. There's a small balance. Our purchases debit, that's where you find the total credit purchases. Purchases debit. We have the purchases returns from the purchases returns book. Purchases returns. We have discount received. We also have contra or set off. We also have cash and bank. We have paid. This side will be bigger. Total, you bring it that side. And you have the balance. You have the balance carried down, which will be the balance brought down on that side. So that is the format for the payables or purchases ledger control account. In this account, we record credit transactions for all the credit suppliers. In this account, we don't enter the cash purchases, no. And in the sales ledger control account, also we don't enter the cash sales, and we don't show the allowance for bad debts. That is very important. So we can do one question on the sales ledger control account. So here we can check the sales ledger balance we have. It's given. The balance brought forward, we debit 23,220. Sales journal, that's where we get the total credit sales. Sales journal, they are 14,194. We have returns inwards journal, those are sales returns. Sales returns, we have 826. Checks and cash received from credit customers will be here. Cash and bank. Cash and bank. Cash and bank, how much do you have there? Cash and bank, 17,918. Discount allowed. Discount allowed, we have 312. And at the end of the year, the balance is given. The balance carried down, 18,358. Then you bring it back, brought down, 18,358. The total here will be 23,220 plus 14,194. 37,414, which will be the same there. 37,414. So that is the sales ledger control account. So I want us also to do the purchases, which is this one. The purchases ledger control account. This one, the opening balance is credit. The balance brought forward 11,241. We have the purchases journal, which is credit. Purchases journal, that's credit purchases, which is 61. We have purchases returns. Purchases returns 246. We have cash and bank. The cash and bank there, 83. And then we have discount received. The discount received, we have 749. The total on the credit side, that will be 112,411,241 plus 61. This will be 17,341. You check it that side. The balance will be this side. Balance will be that side. The balance is 8046, which will bring on the other side. So we have demonstrated how to prepare these control accounts. Please be on the lookout in the second series. I shall demonstrate how to prepare the control reconciliation account, where the individual accounts do not agree with the control accounts. You have to prepare the reconciliation. For today, we can end here. Thank you very much for watching this video. God bless you.